Good evening. This is the post-market recap by AGI Era. Today is Tuesday, March 3rd, 2026, and it is shortly after 4:30 p.m. Eastern Time. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a battle between bulls and bears with a clear defensive tilt emerging as geopolitical tensions weigh on sentiment. The S&P 500 finished the day down 0.94%, settling at 6816.63. Technically, the index is now trading below its previous close, struggling to hold ground after a period of strong performance. The psychological 6900 level, which was within reach, now feels a bit further away, indicating a potential shift in short-term momentum. The Nasdaq 100 also saw significant weakness, closing 1.9% lower at 24,728.4. This underperformance relative to the broader market signals a cautious retreat from growth-oriented tech names. The Dow Jones Industrial Average finished down by 403.511 points, closing at 48,501.27, reflecting the broad-based selling pressure across various sectors. Crucially, trading volume today was elevated, with the S&P 500 seeing over 2.25 billion shares traded, notably higher than the typical combined average for NYSE and Nasdaq. This elevated volume accompanying the market's decline implies that institutions are actively liquidating positions, suggesting a higher conviction behind today's sell-off, rather than a mere rotational pause. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, is trading at 21.44, a significant jump of nearly 8% from its previous close. This rise in the VIX, even with a less than 1% drop in the S&P 500, suggests that while the headline index decline might seem modest, underlying investor anxiety is clearly on the rise, indicating a growing apprehension about future volatility. We are seeing a clear divergence in sector performance. While most sectors faced headwinds, the Technology Select Sector SPDR fund lagged significantly, down 1.43%. In contrast, the Utilities Select Sector SPDR fund, XLU, showed relative resilience, only down 0.62%. This spread between technology and utilities today tells us that investors are favoring safety and defensive plays over growth, indicating a clear shift towards a more risk-averse stance in the face of escalating global uncertainties. The macro engine room. The primary driver of today's moves can be traced back to the bond market and the broader geopolitical landscape. The 10-year Treasury yield settled at 4.063%, up 0.026 percentage points on the day. This move is significant because even a slight uptick in yields, especially when coupled with rising geopolitical tensions, can put renewed pressure on equity valuations, particularly for growth stocks whose future earnings are discounted at a higher rate. It directly creates a headwind for sectors sensitive to borrowing costs and future growth expectations. Meanwhile, the U.S. dollar index is up 0.69%, reaffirming its key safe haven status as investors flock to the perceived security of the greenback amidst global instability. And crude oil is trading around $74.61, up 4.74%, responding sharply to the escalating Middle East conflict, which is fueling concerns about supply disruptions and higher energy costs. The AI and Tech Monitor, turning to the leaders of this market, artificial intelligence and big tech. This group, often seen as a bellwether for market sentiment, showed mixed signals today. NVIDIA finished the day down 1.33% at $180.05, reflecting the broader tech sector's struggles. Microsoft closed up 1.31% at $403.79, showing some individual strength against the tide. Apple finished down 0.39%. Alphabet closed down 0.97%, while Amazon managed a slight gain of 0.11%. Meta also saw a modest increase of 0.21%. Tesla was a notable laggard, dropping 2.72%. The mixed performance in this group is notable because while some mega-cap tech names like Microsoft and Amazon showed resilience, the overall weakness in NVIDIA and Tesla, coupled with the broader tech sector's underperformance, suggests that even the market's darlings are not immune to the current risk-off sentiment and macro pressures. The divergence highlights a selective approach by investors within the tech space. After hours and look ahead. Looking at the after hours tape right now, shares of OceanPal Inc. (SVR) are moving significantly, listed as a top after-hours gainer, indicating some isolated pockets of activity. As we pivot to tomorrow, the calendar brings us a fresh slate of economic data releases, which investors will be scrutinizing for further clues on the Fed's potential path and the health of the economy. Investors should specifically watch for any further developments in geopolitical tensions and their impact on commodity markets, as well as the initial reaction to tomorrow's early economic indicators. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed or inaccurate. Always conduct your own due diligence.